Good morning, everyone, and welcome to this new session of the morning briefing. Just a moment while I make sure I've started, that I've set the recording perfectly. Let's start. In short, with a recap of what happened yesterday. A day indeed monumental from the perspective of volatility and, volumes. Truly indeed. A very, very important day. Indeed, almost a historic day, really. In short, the volatility was very high, which led to monstrous mass swing launches. So who took advantage of it? Clearly, indeed, some might have been caught off guard by this volatility, perhaps having never experienced it before. In short, as far as indeed throughout my entire career, there have been very few occasions where we have witnessed fluctuations, swings of this magnitude. So what to say then? Let's start with the Nasdaq. In short, the situation is such that at the moment, indeed, we have somewhat closed the gap with which we started the week. At the moment, indeed, we can recovery yesterday. In short, with this continuous flow of news about the trade war, indeed, it is ongoing. So today could also be a similar day, with news following one after another. So utmost prudence, utmost caution, I urge you. Reduce the size. You see that even brokers are increasing your margin requirements. So this means that indeed we are experiencing particular moments. So utmost prudence, perhaps. One can also decide to stay out of the market during such a volatile period without risking perhaps a few months of good work. Indeed, because maybe a few wrong trades in these market conditions can really, in short, hurt us. So having made this further appendix indeed on the particular moment we are experiencing, let's return to the Nasdaq. Well, yesterday it made this spike, like indeed on the news of this temporary tariff freeze, then it turned out to be fake news that brought prices up to 1850, 1860 in this spike. Then it retraced as soon as the news was retracted, but at the moment it is recovering. You see this flag, which we can essentially identify as a retracement of a broader movement. And there are steps, even though I believe the volatility is so high that, yesterday, to give an example, indeed, yesterday, we went from 16.5 to 18.3. In auction, there are many data points. So at the moment, we are working on the PC levels. There is an upward push on the details at its network of 1. Certainly, this area here where it stopped yesterday, which today represents the area of 1D Max and the VIX cluster. This is the area to monitor, certainly. First of all, obviously the full candle, excluding these shadows that were there, which are probably just the result of momentary volatility. So 17,985, 18 Maria, 18,000. In short, the area to monitor, which then corresponds to that of RT on the downside, obviously. In short, let's keep these minimums in mind here. In short, a return in short. Breaking the code of the gap again in short, thus leaving 17 to 100. Obviously, it could provide the new upward push. Today, there are not even any particularly relevant macro data in short. However, as I mentioned earlier, there are certainly many news items that can be pursued, so utmost caution and attention always. Let's now move on to the standard pool. T2 in short yesterday with crazy volatility. In short, the head in the sum made from 4,995 to 5,190, 200 points in 5 minutes. That's a lot for the standard. At the moment, it too is working. You can see that it's already close to this area here of RT2. In short, which also here requires attention, in my opinion, even if we reduce it a little bit. In short, we see that it doesn't change the situation much. Wait, let's find a moment, a new indicator, because otherwise, or it gets a little out of view. Here it is. The situation exactly. In short, it's similar to that of, identical to that of the Nasdaq. So this is the area to monitor for potential, bullish attacks on this area here of max, which then represents this 53.20. after passing the red D2. This is the next attack, in my opinion, to the downside. Obviously here as well, we monitor this 57.6, 5,000. This area here is the one to keep. A break of this area here to the downside. From there, certainly to broader and more substantial movements. So always maximum attention also for them. Let's move on to the other futures. With here, this is the Dow Jones situation in short. They are all similar, so it almost seems superfluous to have to show them. But it's just to make you understand that these are collective movements that we are witnessing, because the rotations in the new positions of big players, well, obviously they are coordinated a little bit across all indices and all assets. Later we will see that even with gold, everyone, copper, silver, a little bit of everything, there's movement on the booms, even if we don't follow them in a particular way. But even those with the prospect of increases, of nothing to point out, cuts and rates for the next year. In short, a situation that is still very, very unclear. We need to wait for all this dust to settle, or to then have a little bit a clearer view of what is happening and where the market is heading. So during this period, I repeat, caution and navigating by sight. This is what I feel like suggesting to you. We were talking about the Dow Jones, a similar situation. So this is the situation to monitor. Possibly attacks even a bit above the range, max 39.9. Certainly, this is the area to monitor, because in short, if it passes, it is obviously two downwards. In short, here too, a return to the gap area. In short, could certainly bring prices, so 38,320. In short, the area to monitor for possible declines, then this BC3 level below. So this area here between HVSD0 and SD1, in short, is the area to monitor. That the potential break could certainly lead to new highs of these lows. In short, in the area of 36.50. Let's also look at the Russell Lay, in short, which this morning is also recovering, even though in short it is still further behind compared to the others, even though it is heading towards red D2. In short, that area we identified for the other futures was a bit higher, so it was in the area of 1D max VIX. Today, while on the downside, the area to monitor is absolutely this 1800 area to monitor, which is crucial for understanding the current market trends and potential shifts in the economic landscape. Perfect. Let's also take a look at the DAX, which this morning are 9:30, almost in Italy. That is in just after 9:30. So Germany open for about an hour and a half. It's hitting a bit more at the top in short, for a bit more weakness. The interest is a bit more towards the American markets at the moment from the operators, even though in these days, in short, even here, the volumes have been high. Not, however, at the level of monstrosity seen for the American futures. At the moment, we are working right within the BC3 range. Probably, in short, we will remain anchored there until the American markets open. Because in short, in the end, I believe that's where it is. In short, the game is to monitor 25, 25.19, 19.950. These are the areas to monitor with high volatility. So this range is the one to watch for potential attacks. Then on the upside of this zone, which then represents the one shown by the spike for the American futures as well. Okay. Let's move on to oil now, which, well, not yesterday too. In short, in anticipation of this thaw regarding tariffs, it had recovered a little, but then completely retraced all the gains made. So at the moment, we are working on it within the ring of BC3 levels. right at the HV level. So we will probably remain within these BC3 levels until the American markets open, where then, well, it will be decided a little, well, what to do, to be monitored. Certainly this level 59.80, which is an interesting level with possible excursions towards 59.25 to 59. Obviously, for these spikes, which on a volatile product like oil can be easily reached. Let's also look at gold, as I had initially mentioned. Here it is. We're getting there. It has retraced a little, well, quite a retracement. This is a daily chart. This was more or less the retracement pattern that I expected. We went a bit further. Well, we are working on it. I expect probably a continuation of this movement as we have already drawn it. Here there should be a head that I removed just to make it a little better to see the chart. Well, so this is the situation. We are waiting to see the developments because certainly gold is the product that is popular due to all these risks of recession, trade wars, real wars, etc. I wanted this is copper. It too, I never know. And Azus is undergoing a little bit. The consequences, because copper is widely used for artificial intelligence, for chips, so certainly an economic contraction would lead the price, that product of the commodity, to fall due to a consequent lower demand from the market. Perfect. Having said that, I believe I haven't forgotten anything. As always, I invite you to leave a like on the video. We'll catch up later in the chat. Thank you all for your attention.